Welcome to the Daily Stock Review. Today we're going to go over Palantir. The goal of this channel is to uncover the world's best stocks that have 100x potential. I'm an individual investor on the journey, just 2,500 hours in over the last 7 years. I'm sharing the lessons along the way. Today we're going to go over the stock analysis. We don't have any YouTube comments, questions and answers at the moment, so feel free to go and add to those and ask any questions, but we will be reviewing some goals. My investment process is 5 steps. Today we're going to go over where I came across this stock and the 5-minute check to see if it's worth looking into further before spending more time and effort looking into it. Learn from these guys. They did pretty well for themselves over just a little while, and by following in their footsteps, hopefully try and emulate some of that success as well. Alright, let's crack in. I came across this stock. There's a lot of talk about Elon Musk and Palantir and the brothers that left PayPal back in the day and what they've gone and invested and grown their next businesses in. So in the news, pretty much, YouTube videos and things like that, seeing Palantir come up, Palantir's evil. Let's actually go and see if it makes some money. So what I do for my process is Palantir annual report. Literally just go and look for that. I can see that the 2025 final year 10K has come up. So I will go just straight into that PDF and have a look at that. I'll wait for that to load up. Looks like it was floated and IPO'd back in 2020. It's then gone through some rough times, I guess, in terms of the price of the stock, not the value of it necessarily. And then it's had a big jump up in pretty much 2024, where, it's pretty much gone from, $65 up to $200, and then it's slowly climbing back down the mountain. So let's have a look at this. What I am looking for is the financial statements. It's a quick check to see if a few items have actually dropped out into reality. So a lot of people can talk a lot of things up, but it's harder to fudge the numbers of reality. So financial statements, supplemental data. And 3 things that I'm looking for. I want to see that this business has mastered its customer. So is it making money? What are the profit margins kind of looking like? Also want to see, does it have a moat around the business? And you can usually see that in the financials. So a profit margin's pretty healthy. That usually indicates that they have pricing power. So think of Coca-Cola compared to any other cola brand, or fizzy drink, whatever. People just are aware of the brand and know what they're going to get, so they go and get that, and they're willing to pay a little bit more for it than other, if home brand, some other no-name label brand was there. What else we got? Mastery, mode, and management. So also want to see if they've been allocating the funds of the business in a rational way. So let's have a look. I usually like looking through the income statement, which is the statement of operations, also known as. Zoom in a bit. So we've got revenues. It's in thousands. So revenue is 100,000, million, 4 billion. So you can see in 2023 to 2024 to 2025, you can see that it's gone 2 billion, 2.8 and 4.4 billion. Cost to revenue has gone up, but the gross profit is also increasing as well. And 4.4 compared to 3.7 is a really good gross profit. Let's go and have a look at what else drops out in terms of the costs. So total operating expenses comes out to, like, sales and marketing is obviously pumping a lot into that. Research and development and general admin. So income from operations, we're down to 1.4. Interest income, other expenses, and what are we left with at the end of the day? So net income of 217 million, 467 million, and then 1.6 billion. So a pretty substantial increase. So let's go and have a look at the balance sheet. So first of all, that one showed me that, yep, they are making money and they look like they do have some pretty serious product market fit, given the rapid growth of sales or revenue. Okay, so let's have a look. Cash and cash equivalents. It's in thousands again, so that's 2 billion, 1.4. So it's cash equivalents is decreasing a little bit. Put in more into marketable securities, other bits and pieces. Total current assets is increased to 8.3 and total assets is 8.9. So they don't have many non-current assets. Property and equipment is pretty much negligible. So that's interesting. Operating lease right of use assets and other assets. Okay, interesting. It's just showing that, this business doesn't have to invest a lot back into the business in terms of property and equipment to be able to make that cash that it's making, or net income. We'll see how much cash it's making soon. Current liabilities. We've got accrued liabilities, deferred revenue. All right, pretty ordinary looking right there. And non-current is significantly lower than the assets. So comparing current assets, so everything that it can be liquidated or be able to be turned to cash in 12 months, is definitely able to cover the current assets as well as the total liabilities easily. So this balance sheet is quite healthy. So that's a pretty rational look at it. What else have we got here? So additional paid in capital, accumulated other comprehensive losses. So you can see that previously the business hasn't been making money and it's starting to pay back that accumulated deficit that it's had. So it's gone from 5 billion down to 3.5. And as it continues to bring in cash, it'll replace that. And that pretty much means that those initial shareholders, especially the ones that bought in pre the initial public offering, the business's value is continuing to rise. So let's go and find the cash flow statement. Statement of cash flows. All right, so we have our net income. It comes in 217, 467, 1.6. We got depreciation, stock-based compensation. Whoa. All right, well, that is pretty significant. It is not in, I guess it has increased from 23 to 24, but hasn't increased in 25. But this will be an item to keep an eye on if you own the stock. As the stock starts to mature, as long as those incentives of the business are actually continuing to drive growth within the business, that may be a reasonable amount to spend on just trying to drive people forward. Or it might be getting too excessive. It just depends on what the results of the business are. Unrealized, realized gains, non-cash consideration, accounts receivable, coming out, all these adjustments, contract liabilities, net cash provided by operating activities. So 700 million, 1.1 billion, 2.1. So by taking away property and equipment, we're left with pretty much the free cash flow of this business. After that point, the business can really decide what it wants to do with the rest of that cash, whether it's put it into various other, financial instruments. It wants to invest the money in different areas of the business and things like that. It can go and do that. So what do we got here? Purchase marketable securities, and then proceeds from sales and redemptions of marketable securities. So really, that's just a way to keep the business cash liquid, so they can have that money on hand and just adjust it, pull out what they need, depending on what happens within the business. You got net cash used in investing activities. So they've put a lot more purchases in. So the spare cash that they had, and free cash flow, they've actually put into these marketable securities. You can see proceeds from common stock options. That's when they actually have to pay their employees for actually having those ones. It's not just putting them to the side. Repurchase of common stock. And which is, they've done a little bit there, which is nice. And especially since it looked like the price was had escalated quite quickly. And cash at the end of the day. So it's cash positions increased from where it was initially. And what they've done with that spare cash at this stage is they're stockpiling it in terms of marketable securities. So having a look at the business further would be to understand what their strategy is. They're obviously keeping that money on hand for could be many different reasons. We're only doing a 5-minute check, so all those kind of questions and answers need to be answered if looking at the business further. So is this business got a moat around it? I'd say yes, it's got some pretty good net margins. And is management being reasonable and rational with how they're spending the company's money? I'd say yes. The only kind of yellow or red flag is to keep an eye on this stock-based compensation. What I would want to be looking at if I was a shareholder is where are the incentives listed out for where this business is going in the long term. So what I don't want to see is incentives being provided, yearly for pumping the stock price up. I want to see things that are actually a second order consequence. So they do these things that will add value to the business, and down the line, it'll be recognized by the market as more valuable. Not doing big promotional events and things like that to try and bump the price up short term. Constant updates to the market, etc., etc. Okay. So would I be looking at this business further? I'd say yes, there's significant growth potential on it. I have, from a little bit of research and reading, a lot of Palantir's technologies and things like that are going into long-term contracts. So say for the government and things like that, which I guess they can be fairly fickle, but it's also very difficult to get in the room to get those deals done. And so that in itself is, part of the deal in terms of having the know-how, having that sales ability to be able to get into those circles is a challenge in the first place. So that adds to their moat. All right. If you've enjoyed this, feel free to subscribe, give it a like. If you subscribe, I'll be doing these, and you can have obviously updates when new videos come up. If you have any questions about it or any ideas, feel free to drop them in the comments and let us know. And if you've got any other take on it, and if there's any other businesses that you guys are looking at, feel free to let us know. Appreciate it. Otherwise, I'll catch you guys in the next vid, and you can check this one out here because YouTube reckons you'll like it. Cheers.